Everyone and welcome to today's More Report Chart Analysis videos with me, Rich Pro Market Analyst at Hantec Markets on Friday, 2nd of March. Big turnaround. We've had this announcement from Donald Trump that he's going to be imposing tariffs, trade tariffs on aluminium and steel products, 25%. Now this is a big market fear. Protectionism is not positive for the US economy. Trump is, in his wisdom, thinking that this is going to improve the trade deficit. It is not going to do that because it basically just reduces general economic outlook, and subsequently you see a reduction, yes, in imports due to the higher prices from abroad, but also you get the subsequent reaction from other countries as well, and subsequently exports get affected as well. So subsequently you get almost a zero-sum game, but economic product is affected negatively. Subsequently the dollar comes under pressure, and that's what we've seen. This is the dollar trade weighted, and it had a bear key one-day reversal yesterday. Sharp moved lower, 91. I talked about that as your level on the dollar index. Old support becomes new resistance, basically hitting that yesterday to the downside, and it has shifted the outlook near term for the dollar. Dollar now turning negative. You've got dollar showing reversal signals again across all these charts, and I'll go through them in a bit. But certainly there has been a reaction. Not only that, you've had a safe haven shift as well. Markets moving back into safe haven plays. The 10-year Treasury yield is lower. The 2-year Treasury yield also falling away. Look at the S&P 500, massively down. Big turnaround in that, and you've seen the DAX breaking down below 12,000 today. Big support that is on the DAX being broken. Again, the DAX is an export-heavy index. So subsequently, the trade protectionist outlook from Donald Trump is hitting that hard today. VIX volatility spiking higher, all suggesting that negativity in equity markets is now taking hold. So this is not good, not good in any way at all. You can see here the DAX is down at 2% now. So yeah, not good for that. Dollar down across the board. Interestingly, not against the Swissy, down, which is the Swissy is a safe haven play. Both Swissy and the yen around about 0.5% higher against the dollar today. Euro and sterling again making ground. So this is not positive for the dollar, not positive for risk generally. Now, in terms of economic data today, well, the main focus is going to be this big speech by Theresa May on Brexit. What's she going to do? Is she going to be able to somehow improve the situation that the UK is facing on Brexit? Because certainly the focus on the trade deals is not being taken up at the moment, because the concerns are that the Northern Ireland border is going to rearing its ugly head as the big stumbling block. And how does Theresa May get through that? That speech today will be a big focus for sterling, FTSE, and UK assets generally. Data points. We've got UK construction PMI just come out better than expected. Actually, that is literally in the last couple of minutes as I've been speaking, and that's going to help to support sterling. Better than expected on construction. That is a positive for the UK economy. But into this afternoon, you've got the final Michigan sentiment expected to be 99.5, down from 99.9, which is the flash reading or the prelim reading on that. But yeah, you've also got over the weekend. You've got the Italian elections, which could drive some volatility through euro early next week, and also the SPD vote on the German coalition. So lots going on as we turn into the weekend. Now, my chart today is sterling Aussie. Now, sterling Aussie has been trending higher in recent months, but the failure to breach 79.95 back in February has put added pressure on this uptrend, which is now breaking to the downside. Wednesday's closing break, you had the market which failed to reclaim the old uptrend, which is now resistance yesterday. Market certainly seems to be sort of breaking that trend higher and turning into in the least a consolidation which will be intact whilst above the support at 75.75 area from the February low. But look at these momentum indicators. MACD line is starting to tack lower. Can the stochastics hold up above that sort of 45 area, 50 area? Also similar move, 50 on the RSI. So the market is consolidating now on sterling Aussie rather than trending higher. And the question is, will this turn into a corrective move? Now you've got lower highs consistently on this chart now, on the hourly chart, trading below all the moving averages. Momentum indicators taking on more of a corrective configuration. RSI failing around 60. So yeah, it's beginning to sort of start to look a bit more corrective, but nothing yet decisive. Wednesday's low 76.65 initially supportive, but this has certainly now lost the upside impetus in the rally, and it looks like it's in the very least consolidating now. So I wish you good luck in your trading today, and I will speak to you later.